All right, YouTube. Good afternoon. All right, I think everything should be fine on YouTube, guys. Let me know. I think nice. Now you can give me a thumbs up in the chat. Everything should be prim and proper, guys. Apologies for this. This is our first official stream on YouTube. All right, if you are catching me from somewhere across the other side of the world, please switch on your subtitles. I am speaking English though, so I assume that everybody should be acquainted with the Queen's language. But yeah, in the YouTube chat, can everybody give me a thumbs up? Are we good? We should be good now. All right, Marcel says we are prim and proper. YouTube, guys, let me know. We got 18 people in the chat watching right now. We're cooking. We're cooking. Sasha says we thumbs up. All right, ladies and gentlemen, let's get it started. Welcome to the Daily Pulse, your daily dose of high impact news, guys. We're coming through you straight from YouTube, proudly powered by Just Markets. All right, first and foremost, we cannot underscore how important this is, guys. We're dealing with a reputable broker who's actually on our side. So, shout out to that. Cheers to Just Markets. I'm gonna need that coffee. It's gonna be quite the stream, guys. We're gonna be live from now up until 3 o'clock. So, going into the data, we'll analyze how the data is looking, and then we'll look at previous NFP data. So what we got to do, guys, we got to reverse engineer this entire equation. All right, we cannot just rely on the NFP data itself. We need to take everything into context. We need to look at the inflation data. We need to look at the jobs data. We need to look at what the Fed is trying to achieve with their monetary policy, and that will dictate exactly what we're doing. All right, alas, let's get it started, guys. What I will do though, what I will need from you guys, just some constant communication on YouTube, guys. Let me know if there's something wrong with the stream. Let me know if there's something I need to adjust. I don't want to be here speaking and then you guys don't hear me and it's a big, So yeah, just keep communicating with me out there on YouTube, guys. Give me some direct feedback if there's something technical that I do need to adjust. All right. All right, the Music Corner says, before you go deep into the market, how's Cape Town been treating you? Cape Town has been amazing, bro. Cape Town was absolutely amazing. I cannot understate it, all right? It was proper stuff. All right, let's open a new Word document. All right, NFP live stream. I'm gonna make some notes for us, guys. All of the things that we need to kind of figure out on our way into this data dropping so that we are armed and ready and we're not caught slipping. All right, either event in any outcome, that's irrelevant. It's our process that matters. If we've got a good process in place and a means to and a mechanism to understand the data and put it into context, then I think we've done our job for today. The main aim is not always to make money. I mean, it's nice to make money, but yeah, the main aim is to understand what you're doing. All right. Now, let's get into the live stream notes, guys. All right. All right. Chat on YouTube. Are we still good? Are we still fine? Everybody can see my screen. Everybody, am I audible in the right way? If I am, just give me a thumbs up and we can get cracking. All right. YouTube, I'm relying on you. Instagram, I can see everybody's over here paying attention nicely. Let's go on over to our notes. All right. So, first things first, guys. Number one, we need to understand where we're coming from and as far as inflationary expectations are concerned. So, let's put that number one questions we need to answer. All right, number one, inflationary concerns. Number two, uh, jobs data. Number three, tariff uncertainty. And if we can answer all these questions, it'll give us what the Fed is likely to do with their interest rate. All right, so these are the four questions we need to answer. heading into this data. The real shepherd says, if I'm wrong, please correct me. The past 5 months, NFP didn't make any massive moves. Well, it depends what you define by a massive move, but we did get a lot of in my view, we did get a massive move, particularly in gold. If you look at 2 months ago, February's NFP, so we're looking at March. When we were in March, the NFP there gave us a huge move up on gold. So yeah, I think it depends which chart you're looking at there. But guys, do you agree with me on YouTube? The questions that I've put to you right now, and as far as what we need to answer, do you think these are the relevant questions? Let me know on YouTube, guys. What do you guys think? Because this is going to determine how we interpret the data. Let's have a quick one about that one. Let me know, guys. What do you guys think about the questions that I pose to you? We need to understand what the inflationary concerns are right now. All right, we'll start with inflation. What is the jobs data looking right now? All right, because the labor market is very important. Remember, guys, the Fed only has two priorities: maintaining price stability, which means keeping inflation at acceptable levels, and ensuring conditions that can create maximum employment. All right, maximum employment means keeping a stance that's not restrictive, that can facilitate economic spending, higher retail sales, which can translate into more jobs created into the economy, which translates to a stronger dollar. All right, Steve says, yeah, most definitely. Shout out, bro. All right, now after the jobs data, then we need to sift through the tariff uncertainty. All right, because once we can sift through the tariff uncertainty, then we can make our way over to now what does the Fed do? Because the Fed acts on lagging data. So if we're expecting a Fed to preempt where tariffs are going to go, then you're going to be waiting a long time and you're going to be very disappointed because Jerome Powell is a very pragmatic man. All right, he is data dependent, and that's what he always says when he comes out and stands on that podium. That, ladies and gentlemen, the Fed is going to be data dependent. We're not going to listen to outside pressures from the market. We're not going to be dictated to by the stock market tanking. We're not going to be dictated to by Donald Trump and his wanting for interest rates to go down without really understanding the inflationary narrative, the impact of the tariffs, if there are going to be any economic slowdown fears, all right, because that's the implication of the tariffs. Now, what I want to do is break down each and every one of these questions, all right, because that is what's going to determine what we do with this NFP data. All right. Shout out to my colleagues. Shout out to Michael. Shout out to Zulfa. Shout out to Michelle. Shout out to Kevin. Shout out to Matthew. All right, guys. All the guys holding it down in Cape Town while I'm streaming over here. Shout out to the A team, guys. Really, really appreciate you. All right. Yeah. Now let's keep it going. Let's keep it going. Let's keep it going. Inflationary concerns. So let's start with inflationary concerns. Let's look at CPI over the last couple of months. All right, let's look at the trend for inflation. Let's look at PCE. Let's look at CPI. All right, let's look at CPI. Let me just pull it up here. Just give me a moment, guys, so I can just switch between these two things. Let's go. All right. All right, let's look at CPI. All right, we need to build some context. We need to figure out exactly what we're dealing with, and more importantly, what the Fed is going to be dealing with, because their response to this data determines how the data is going to play out. Okay? So yeah, that's where we're at in this whole narrative right now, ladies and gentlemen. Right, we're just waiting for the CPI data to load for us. Next week, I'm not getting it. Let's look at PCE actually. Let's look at PCE. Let's look at PCE. Let me reload this page. Everybody in Instagram on YouTube, all right? If you want to catch and follow along with what I'm doing, looking at my screen, looking at all the data, looking at all my charts, then you want to join us on YouTube because that's where everything is going to make beautiful sense for you, all right? Now let's see. Let's try and look for inflationary data because that's what's important right now. Let's look for that. All right, guys. Let's pray for a smooth internet connection. All right, because hey, we're in South Africa, guys, and sometimes these power outages they do affect the internet connection. So if we do get interrupted in the stream, just know that it's not me. It's not me. It's Escom, and they're affecting the fiber. All right. So yeah, so far so good though. I think we're doing all right. We're doing all right. We're just waiting for this inflationary data to load. Can I look for it on a different chart? Let's check Google. All right. CPI chart USA. Okay. Bureau of Labor Statistics. Let's look at CPI for the last 6 months. And then I think that might give us an inclination of where we need to be versus where we want to be. Okay, let's just wait for that. All right, this is taking unusually long. This is crazy. Apologies for this, guys. Lagging internet connection, but all is well. Marcel Human says more consumers is more working people means higher payroll. Absolutely, bro. So the way that stimulating the economy works is usually that looser monetary policy, i.e., lower interest rates. All right, let's check. Let's go to just hang on, guys. Let's go to just markets because this economic calendar is being finicky. All right, let's check just markets. Investing.com is not giving us the heat right now. All right, let's check just markets. Everything else can wait. Let's check out just markets and the economic calendar we have on our website. Thank you for that, Michael. Let's check this out. What are we looking at? Ladies and gentlemen, King Kong, are you guys, can you guys hear me properly? YouTube, just let me know in the chat below if you guys can hear me properly. Like I said, I'm gonna need constant communication with you guys just so that we can have a smooth stream and so I can make adjustments on my, which is a bit crazy, but I guess it's from the streaming that I'm doing right now on the multiple devices that are concerned, that are connected. Okay, let's try to close some tabs. All right, I think maybe if we close some tabs, we might get some progress. But in the meantime, let's go back to what we were talking to load. Let's just go back to those questions that we've got that I want to answer for you. All right, all right, guys, just hang tight for me. All right, so we've got the chart. Let's check out the article. There we go. All right, cool. Now let's answer these questions, guys. Let's unpack this real quick. So, in as far as inflationary concerns are, I'll just do this top of my head because I know exactly what's going on. CPI. All right. We look at the trend on CPI, trending lower. We look at PCE. We got PCE data last week, trending lower. The target for inflation is 2%. Right now, we're slightly above this 2% handle. All right, which is problematic largely for the Fed, but not too much because we've come off of these crazy levels. All right, jobs data, that's what we need to look at next. So, inflationary concerns, I think let's highlight that in green because that's looking better. Inflation is easing and coming closer to the expectations that the Fed does have right now. So we'll have a look at that. And as far as the expectations, economic calendar, I might just actually pull it up on my fucking phone actually. Jokes aside, because what I'm seeing and what I'm dealing with is a bit crazy right now. There's no ways we should be waiting this long just for an economic calendar. Crazy stuff. All right. Let's look at that article again. Right. Okay, guys. Okay, Mbumelela says, do you think what's happening between Trump and Elon could affect the market? Absolutely. If you look at the share price for Tesla, it's already been baked. It's already been baked, guys. So, yeah. And as far as the economic data is concerned, the spat between Donald Trump and Elon Musk is proving to be consequential and actually moving the markets. Great question, then, Pumi. Great, absolutely superb question. Absolutely superb question. That is the line of inquiry that we need to be thinking about. And as far as what our expectations are, definitely. Okay, what's happening with the article? Let's get this article out here for you guys. Just hang tight for me. We need to keep answering these questions. These are very important questions. And as far as the data is concerned, guys, this is a bit crazy. How am I not finding the. Let's see. Okay. All right. Ladies and gentlemen, all right, let me add that article in manually again, and then we go again. Let's do that. Let's add that in so we can break down those questions. We need to check out the jobs numbers because, like I said, inflationary concerns are coming down, but the jobs data is looking a bit shaky. You feel me? It is looking very shaky. Let's put right there. Okay, there we go. We've got our article in sight. All right. Let me look for this economic calendar on my phone and then let's quickly discuss that because that is what we need to be talking about actually. Let's check out investing.com real quick because I'm not seeing this data on my browser. All right, let's try this browser one more time. If it doesn't load, then we just wing it. I guess we'll just wing it. We'll look at a different source. But and as far as I can see right here, I am not seeing anything. So what I'll do is I'll just read this data out to you. All right, you can check it on your side. Let's open the economic calendar and let's look at inflationary concerns. All right, I want to go to CPI. Let's look at CPI, the year-on-year figure for the last. All right, so CPI, ladies and gentlemen. All right, let me just pull it out and write it down here. CPI, right now, we're sitting at a level. Okay, let's go. CPI, and as far as the trends that we're looking at, CPI, let's go back all the way to January. January was sitting on 2.9%. All right, so let me do this. Let me do this. Let me do that. We're sitting at 2.9. February, We were sitting on, let's see, February, we were sitting on 3%. So we had an uptick in inflation in Feb. All right. March, 8%. Can you see we're building a story? It was sticky. Then we go to April, 2.4%. 2.4%. This is the hard work that you guys need to be doing, all right? When it comes to economic data, you need to be breaking it down on this scale. And then we go to May, we trended down to 2.3%. So immediately when we look at the inflation data, we can clearly see a downtrend when it comes to that. What do you guys think about that, chat? Everybody on YouTube, that is. What do you guys think about the figures that I just showed you? All right, just let me know there. And then, but we can clearly see we're on a downtrend when it comes to inflation. Now let's look at PCE. All right, PCE, we had that last week Friday, so let's look at that. Calendars. Let's look at PCE because that's the Fed's favored measure of inflation. All right, so let's check that out. No. PCE right now is sitting at US PCE. Let me just Google it real quick. See data latest. Year on year, we are sitting at. Just hang tight for me. I'll pull up that data real quickly for you guys right now. Current PCE rate USA. All right, let's check that out. Shout out to Eddie in the chat. We're sitting at a 2.1%. And as far as PCE is concerned, ladies and gentlemen, so we are trending down, guys. We are trending down. PCE, we're sitting at 2.1%. That's great. That is absolutely fantastic. So when you look at the preconditions, guys, very important. Now, this is where you either get it or you miss it. Inflation, guys, has been a problem for the Fed. The reason why the interest rate has not gone down since December is because of the sticky inflation. It's been sitting sticky above 2.7%, as evidenced by the CPI trend since January. Now that we've made our way towards 2.3% on the CPI and 2.1% on the PCE, which is the Fed's favored measure of inflation, now this gives the Fed some scope to potentially cut interest rates. You feel me? Let me know what you guys think in the chat. If that makes sense, then I think the rest of our conversation is gonna wrap it up nicely. We're about 16, no, I'm lying, 26 minutes out from that data dropping on us. I just want to know, before I move on here, are you guys happy with the way I've broken down the inflationary expectations? Please let me know there on YouTube. All right, we're sitting on 76 views. We're sitting on 30 concurrent viewers right now. Ladies and gentlemen, it is beautiful. I'm actually absolutely loving this, guys. For a first stream, this is not bad at all. All right, let me know what you guys think. Is that proper in the way that I explained it to you? Does it make sense? Because it absolutely needs to, boys and girls. It absolutely needs to make sense. All right. Stance says, yeah, absolutely. All right, that's what I want to hear. That is exactly what I want to hear. Now, let's move on. Okay, now let's look at the jobs data. All right, because this is the end all and be all. Let's look at the jobs data and what the trend has been since January. Because context matters. Again, I keep telling you guys, context is very, very, very important. Okay, there we go. Investing.com is actually cooperating now. Let's open the economic calendar. Eddie says Recopa signal. I cannot signal, Joe. All I do have though is some fire insights. If you can take these insights and make something of them, bro, or on. All right, so let's have a look if we can see the browser. All right, that's still. Nah, I'm actually giving up on this. It actually doesn't matter. Screw that. We're not messing with that. We're not going to argue with that. From February. All right, let's look at the jobs data from February and break it down and make sense of it. All right, here we go. Jobs data. Let's look at the jobs data. All right, so can you see this figure is very, very close to where we need to be. Very, very important. All right, so what can I do? Let's do this. Final thoughts on this. And as far as the inflationary data is concerned, give the Fed the green light to cut rates. All right, the information above here, the inflationary data gives the Fed the green light to cut interest rates. That's what we're seeing here. Now let's look at the jobs data. Let's look at the jobs data. Okay. Now, jobs data, we're looking at Feb. We were sitting at 143K. March, we went up to 151. We went up to 151 in March. All right, Marcel Human says more consumers are using the dollar, means more working people, means weaker dollar because a lot of people have money. Am I right or not, bro? I'm asking to help understand. Great question, bro. So, more economic spending, if that's what you're asking, equals to higher retail sales. Higher retail sales will transfer or relate to a higher jobs number, hiring jobs data. Higher jobs data will translate to stronger GDP. So that's the way you need to look at it. All right? All right, we're done with March. April, 228. That's when we had that blowout figure. All right, 228K. May, 177. Ladies and gentlemen, who needs an economic calendar when you got Mr. YC breaking it down nicely for you like we're in high school? You feel me? All right. Now, expectations for today. June expectations. 126. That right now, guys. All right. We're sitting at 126 for the whisper figure that Wall Street is expecting. Now, let's put this into context. Okay. Because this is what you guys want. So if we get a jobs number that is higher than 144, I think that this. No, I'm lying. Let's go higher than. Let's look at the average. So, February, we've got 143, 151, 228, 177. So if we add all these numbers together, all right, let's do that. Let's actually bring out a calculator. All right, maths is very, very important. Maths is very, very, very important. Let's average out this number and see what the average is, and I think then we'll get a better sense of where we need to be. 143,000 plus 151 plus 228 plus 177. Okay, divide that by 1, 2, 3, 4. So our average, ladies and gentlemen, for all these figures, 174. So if we get a figure higher than 174 in terms of expectations, stronger dollar, guys. Stronger dollar, and I think this could sell risk assets. If we get a weaker number, weaker than the lowest number there is 143. So if we go lower than 143, ladies and gentlemen, then I think we could be looking at a weaker dollar. This could be a buy for risk assets. By risk assets, I mean anything that is on the spectrum of emerging currencies. So if you're looking at a Euro USD, then that might be a buy for risk assets. All right. It's all about where the dollar is on the side of the quote. So risk assets, I'm talking stocks, I'm talking emerging currencies, I'm talking anything outside of gold. All right. So if we go higher than 174, it's definitely a stronger dollar, and I think this could make the dollar stronger, and we could see a sell on assets like Euro USD, GBP USD, etc., etc. But if we get a weaker number than 143, what this does, or what this says to the Fed, is that the labor market is weakening, and if the labor market is weakening, then they might need to drop interest rates even more aggressively or quicker than they would have assumed. Also, the inflation is giving them the scope to drop interest rates. So, long story short, we've got good inflationary expectations. That's good for the Fed. It gives them scope to drop interest rates, which is going to be positive for gold and risk assets across the board. That might potentially weaken the US dollar. But if we get a weaker jobs number than 143, Trump, because they could hold rates higher for longer at the point where they are at right now. I do not think that we are at the risk of seeing interest rates going up. I think that ship has set sail, ladies and gentlemen. I think right now the Fed is looking for a reason to drop interest rates, and today could be that reason. Ladies and gentlemen, what do you think of my preamble? Let me know what you guys think in the comments in Instagram. Let me know what you guys think on YouTube. But I think that's my breakdown going into the economic data. I think after you guys let me know what you think of that, we can get into the technical analysis. What do you guys think? Those of you that are on Instagram, you're going to want to join if you want to see my chart. All right. In the chat, what do you guys think of what I just broke down, the narrative? Marcel Human says, okay, awesome. Thanks, bro. Benji says, more spending equals more jobs, which equals good economy, which means a stronger dollar. Absolutely. Well articulated. I think we can open a chart. Kailetu, what are you saying? DXY losing strength. Let's have a look at gold. Ooh, gold is weakening, ladies and gentlemen. All right. This is lovely. That's exactly what we want to see. Ha! That's exactly what we want to see, boys and girls. That's exactly what we want to see. Blue screens, blues. We're in the blues already. All right. Going into NFP, we're in the blues already. I don't know Instagram if you guys can see this, but we're already in the blues. Going into the data, already in the blues. Now, I must stress, ladies and gentlemen, I'm not here to give investment advice. That is not what I'm here to do. I am not a licensed financial advisor. For those of you that are listening, this is just me making market commentary, and you need to consider this for educational purposes only. If you are going to be trading today, that is on your own risk. It's all up to you guys. You need to know that when you are trading, your capital is at risk and you could lose your initial investment. So, I think we're done with the housekeeping. That was the disclaimer. Okay. But yeah, chat, what do you guys think of gold? All right. Blue screens going into the data. What are you guys trading? Stance just sent a fire emoji. Ashwell Peter says sweet and short like always. That's what I intend to do, guys. So we're all on the same page when it comes to the fundamentals. If we get a weaker figure below 140, that's definitely a buy for gold, in my view. All right, that's just my personal opinion, and that's what I intend on doing. But if I get a stronger number above 170, then I might consider taking a short position on gold because that is what I'm trading personally. Uh, the reason being that a stronger figure might potentially propel the Fed to keep interest rates higher for longer, and that gold does not want to hear anything about high interest rates. All right, gold is ultra sensitive to any spikes in interest rates expectations. So yeah, we have it, boys and girls. Let's do a top-down analysis on gold. We're about 22 minutes out from the data dropping. Let's see if let's try and load Bloomberg. We need Bloomberg. We absolutely need Bloomberg, guys. We cannot be in a position where we do not have, but fuck Bloomberg, man. You know what? It's all good. I'll just check the economic calendar. I don't want to find myself in a position where the stream is lagging because I'm trying to stream Bloomberg. I'm live streaming on YouTube. I'm live streaming on Instagram as well, and my TVs are all connected to the Wi-Fi. So I think let's yeah, let's not do that. Let's not do that. All right, but otherwise, YouTube, are we all good in the stream? Please let me know about the stream quality. Is everything holding up as it should? All right, this is proper, guys. Guys, we've got 36 people watching the stream, and we've only got 6 likes. Come on, guys. Before I go on, I'm gonna need everybody who's watching right now hit the like button and the subscribe button right now. I'm on 304 subscribers. I need to be at least at 340. There's 36 of you here. All right. So everybody, right now, let's smash the like button, please. Smash the like button right now. Let me see the like count go up right now before I move on to anything else. Let's see the subscribers as well. We got 40 people watching. Okay, I just saw someone liking right now. Everybody that's watching right now, hit the like button, smash the subscribe button, guys. Yeah, let's do it. Support your boy, man. Support your boy. I'm doing all this for you guys. All right. I'm not doing this for my health. Um, I'm doing this for you guys. All right. Yeah. Everybody in the chat, YouTube, are we feeling good? Instagram, are we feeling good? Waiting for you guys to hit. Thank you, Pitori Entertainment. Shout out to you, bro. There we go. Everybody is smashing that like button. Please hit on subscribe, guys, because I'm going to be streaming like this every single day. Every single day, I will be doing a live stream on YouTube for the New York trading session. London, I will be live on Instagram. New York, I will be live on YouTube. But you guys will always know what I'm doing. Now, let's look at Sabotage Touch. It says jobless claims. Yes, jobless claims, guys. So going into this week, let's talk about rather the economic data. We had lower ADP data, all right? Non-farm employment, ADP, that was pointing down. Okay, and that is a leading indicator in as far as what we could expect for the NFP figure. We also look at initial jobless claims. I think we're sitting just above 220,000 claims. Now, if you look at the trajectory, if you run the same exercise that we did and look at the initial jobless claims figures for the past 6 months, you'll find that the figures that we got this week are alarming. Okay, so when you look at that, I think there are some considerations that do need to be made by the Fed. There are some concerns when we look at labor market weakness in that regard. So yeah, all right. But yeah, let's check on the stream quality one more time. Everybody in the chat on YouTube, please give me a thumbs up if you're happy with the stream quality. If I'm audible, I know in Instagram everything is seamless and perfect right now. So yeah, I'm waiting for you guys in the chat. YouTube, just let me know how are we looking on this stream. Okay, we're about 9 minutes away from the data. Let me do this top-down analysis. Let me just wait for the thumbs up in the chat. YouTube, once we're done with the thumbs up, let's get into technical analysis and then wait for that data. Okay, Ashwell says, happy days. Cool. Let's do technical analysis on that. Shout out, guys. Thank you for the interaction. Guys, you're really interacting on the level that I expect. All right, this is proper. But I guess I'm dealing with traders, and traders are serious about their business. I feel you. This is not just some random stream, me talking about nice cars or nice clothes or some shit like that. Nah, this is proper stuff. Now, let's look at the economic data. Not the economic data, rather the gold chart. Let's pull up the gold chart. There we go. No, that's not the gold chart. Okay, top down analysis time. All right, plain and simple, guys, straight out of the gate. Nothing too complicated here. We can clearly see on the 4 hour time frame, this is the high of our range. On the 4 hour time frame, this is the low of our range. All right, we're caught in between this high and that low. All right, now if we wanna So we're in the middle of that range. Now what we want to do is build some context. Okay, trend line season. Trend line season for no reason. Okay, the low of that trend, I mean the low of that range, if we connect it and intersect these wicks, we are still on an uptrend. Now, let's look at the relative highs and the relative lows. So we can already see we had a zone here where lower low, lower high, lower low, equal high. We created a new high up there. So the market started trending up higher there. That became our new low of, I mean our new high of the range. This then became our new low of the range. This is where it's found value in the price of gold around $3,250 an ounce. All right, that became our new high. Now we broke out above that and created a new high. Now let's define that range. We're out over there. That is the high of that range. And for now, this is the low of the range. And as you can clearly see, this could potentially be interpreted as a potential bullish flag. If you look at this, we've got an impulsive wave. What do you guys see here? Boom, boom. Could we potentially see this? Could we potentially see this movement? Because this is the scenario if we get weaker inflation data. Chat, what do you guys think about that? Let me know in the comments down below. What do you guys think about that? Let me know. This is the bullish scenario. All right. Sabelo says initial jobless claims yesterday rate higher than previous. Obviously, a lot of people claim for unemployment insurance benefits. Not a lot of employment took place. So I am bullish on gold. I absolutely love that. Shout out to Sabelo. Ha! Who needs me when you got people like Sabelo in the chat? Shout out to you, bro. Cheers on that one. Chat. Shout out to Sabelo. That was a proper analogy. I like it when traders break down their ration exactly the way you did. Because even when you're wrong, at least you know why you're wrong. Your process was spot on. All right. If your process is wrong all the time, then you're always going to be wrong. But if your process is right, but the charts react otherwise, then at least you got one step forward, because then next time you implement the same process and you might get different results. All right. So shout out to Mr. Cullinan in the chat. That's Sabelo Nhlapo. That's a great comment by you, sir. All right, we're about 4 minutes away from the data, ladies and gentlemen. All right, let me pull out investing.com here. All right, we're about 4 minutes away from the data, guys. Icy says, I totally agree on the analysis on YouTube. Shout out to you, bro. Shout out to you. YouTube, are we still good in the chat? We're about 4 minutes away. This thing better not freeze while we're so close from the actual data. All right, give me a thumbs up in the chat, guys. I'm not seeing your comments and I'm getting a bit concerned. I need to know. I need to know what the quality of our stream is looking like. All right, give me a thumbs up on YouTube if we're still fine. If not, please do let me know. We've been live 52 minutes exactly right now. So yeah, that's what's up. That's what's up. That's what's up. Shout out to everybody in the chat. Burberry says thumbs up. Let's go. 3 minutes to go to NFP, guys. All right, so we've written down the bullish case scenario for gold. Let's check out the bear case scenario for gold. Let's check out the bear case scenario for gold. Okay, so if we get higher jobs data, then we could see a smashing through this level, creating a new low, a pullback up to that area. And if we see that, we know exactly what to do. It could be lights out. We could be coming back to the 3,100 handle. Okay, so I'll let you make of that what you will, ladies and gentlemen. Tell me, guys, what do you think of that? Everybody in the chat, what do you think of the bear case scenario? We're about 2 minutes out from NFP. What are you guys saying before the big data drops? Real quick, let me know. We're sitting on 160 views on YouTube. Beautiful, guys. Absolutely lovely. Let me know what you guys think about that. Almost a minute away from NFP, guys. Almost a minute away. Let's look at the data. All right, almost a minute away. All right, let's delete this analysis and just look at some pure, clean price action. Let's take this down to the 5 minute time frame so we can look exactly what's happening. Let's go 15 minutes. Nope, we don't need period separators here. Less than 60 seconds away, guys. Holy shit. All right, chat, are you ready? Is everybody ready? It's about to go down in a bit, guys. It's about to go down. Expectations for NFP 126K. Expectations for the unemployment rate to stay steady at 4.2%. Will that happen? It remains to be seen. We're about to see this data, ladies and gentlemen. Keep it locked. We're on YouTube right now. All right. We're a few seconds away from the data, guys. We're looking. We're looking. We're looking. We're looking. What are we saying? What are we seeing? What I'd like to know. All right. Is everybody ready? Traders, are you ready? Give me a countdown, somebody. Give me a countdown. Are we making money or is it a long story? Are we making money today or is it a long story? Next candle determines this. Oh, we got 139,000 jobs, ladies and gentlemen. 139 jobs. That's less than what we expected. Weaker dollar. Woo! Gold is selling for now. Gold is selling for now, but could this be a sell for a buy? Let's go. Let's check it out, guys. So far, so good. Let's check at the period separators. Show trade levels are where. All right. Get rid of that. We're in at a sell there. We've got a stop loss right there close to the level. Hedging this one on that level. Let's see. Let's see. Let's see. Let's see. Let's see. Are we going down? Are we going down? What are we saying? 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 If you're going to hit that SL, hit it, bro. Don't tease me. All right. Don't tease me. Let's go. Let's go. Let's go. Let's go, ladies and gentlemen. We're in the blues right now. All right. Are we making money or is it a long story because we are in the blues? Blue screens, ladies and gentlemen. Blue screens all around. Blue screens. All right. How you guys doing on your trade so far? All right. I went short on gold in anticipation of these figures, but it is a temporary counter trend move, in my opinion. All right. So NFP so far so good. Profitable sell. I'm in on gold, as you can see, judging by the charts. We're happy. We're good. YouTube, what are you saying? Instagram, what are you saying? All right. You saw it right here. We broke down the data. We had a proper method, all right? We preempted what we could be finding. We looked at the structure, and now we're seeing the real-time reaction. Gold is bearish for now. It depends on how the market opens in the US session, all right? I think everything will be determined by how the US traders analyze all of this data, all right? But that was good, guys. So the official stats, let me read them back to you. Average hourly earnings, the consensus estimate was 0.3%. We got 0.4%. So that's an increase in average hourly earnings. That means that the amount that people earn per hour has increased from 0.3% to 0.4%. It's a positive one on that one. Non-farm payrolls, the actual data, consensus estimates 126,000. We're a touch above that, sitting at 139,000 jobs, still below the average for the year. I think so far this year, this is the lowest data. If we look at the data that the data we've been looking at across the year, just sit tight for me, ladies and gentlemen. Let's bring out this article right here. Here we go. We're looking at NFP. February 143 was the lowest. March 151. April 228. May 177. Today 139. That is even lower than February's data, guys. All right. So we've gotten the lowest NFP for the year. Let that sink in, ladies and gentlemen. Let that sink in. All right. So yeah, there you have it, ladies and gentlemen. I think what we'll do right now for the rest of the stream is just have a look at gold. Look at how things are unfolding on that end. And yeah, see out the stream in anticipation for what's more to come. All right, but so far so good. Floating profits over here by $500. Not bad. All right, we're clean. This is nice. This is nice. How you guys looking? All right, are we making money or is it a long story? Are we making money or is it a long story? Unemployment rate stands steady at 4.2%, ladies and gentlemen. So, and as far as unemployment, nothing much to talk about there. All right, nothing much to really talk about there. We're still good. All right, let's have a look at this. Let's monitor this without some thingies. This always tends to disturb me when I'm looking at it. I always want a clean chart with no trade levels so that it does not impact my psychology. All right, looking at that mark can impact your psychology, ladies and gentlemen. So just be aware of that. We're still stuck in the middle of this range. Nothing much has happened when we're looking at this overall structure. What do we have here? All right, we've got that impulsive wave to the downside, and we're in the middle of a correction. If we look at this, so we've got an impulsive wave, continuation, think lights out to the bottom. All right, could be lights out to the bottom. Short trade levels. Let me move my stop loss to break even. I think if it comes above there, I no longer want to be involved in this trade. All right, out. All right, but yeah, Instagram, we've got 1 minute remaining on the stream, so we're gonna shut it down in a bit. If once this ends, please join me on YouTube. We are looking at the current gold trajectory. So far, positive. How you guys sitting there on YouTube? How you guys sitting on Instagram? Let me know. All right, are you making money or is it a long story? Let me know. So far, it's a positive stream, guys. Thank you so much for joining me. It's actually been lovely. It's actually been lovely. All right. Shout out to you guys. I really, really thoroughly appreciate you. We're going to be doing this more and more often. Every single day, I'm going to be here. All right. I'm going to be here walking you through the data. Every single day. This needs to be your go to. All right. You don't need an economic calendar when you got me. When you got Mr. YC. Nah, you don't, guys. We're operating on the highest level here. T-Ness says, Ish Makor, I need shots of Hennessy. That's what I'm saying, bro. It's a Freaky Friday, man. Why not? I ain't mad at that. I ain't mad at that for shizzle. All right. We're counting down towards the end of our stream, guys. It's been successful. We broke down the data. We looked at inflationary concerns. We looked at what we could potentially be looking at in as far as jobs data. We looked at what the Fed is pricing in as far as the interest rates. And I think I'm going to end off with that before I close the stream. Looking at this data, guys, we're sitting at 1.142. Labor market is not the strongest right now. Inflation is coming down. I think, long story short, the Fed has the green light to potentially drop interest rates in September. Okay, it remains to be seen how that ends up, but yeah, thank you so much for joining me, guys, on Instagram. I think that's it. YouTube, let's wrap it up, guys. Let's wrap it up. Steve says it's a long story. Shout out to you, bro. Don't stress, bro. Like I said, we need to be concerned with the process. All right, the process, as long as you follow the steps that we took whenever you execute a trade, then I think you are making better progress to where you need to be. All right, we don't just want to make money without understanding how we're making money. That is backwards. That's putting the cart before the horse, because then you cannot reproduce those results. But if you follow the process will reproduce those results. So yeah, guys, I think that's it for today. Shout out to everybody that joined. All right, are you guys happy with the stream? Give me a thumbs up. If you're a thumbs up and happy with the stream, like the video, subscribe to my channel, leave the notification bell icon on, and I think we can call it a day. Once you guys are done with that, do that for me, and I think we can call it a day, guys. I'm happy. I don't know how you guys feel. I think I'm good. I think we can take some money off the table, floating about $500. And as far as this trade is concerned, so I think that's a good day at the office. What do you guys think? Let me know. Is that a good day at the office for y'all? Yes or no? All right. Let me know. Let me know. Let me know. What are you guys saying? We're sitting with 32 likes, guys. There's 29 people in the stream, so okay, proper stuff. All right, Bear Berry, shout out to you, bro. Thank you for joining me. And you know, bro, you're one of the stars of the show. You're always with me when I'm streaming. So, thank you so much for joining this first stream, bro. It's been proper. All right, I actually thoroughly enjoyed it. I'm gonna be doing a whole lot of other things that are going to be useful to you guys. All right, I'm going to be messing around with the whole layout that you're seeing on the screen. You're going to be seeing nice infographics, nice logos. It's going to be very engaging and captivating, very, very professional. Like I said, I've got the muscle of Just Markets behind me. All right, so one last thing, guys. Please go to Instagram, follow Just Markets Africa, follow Just Markets Official. That is where you can find me. That is where you can keep up with everything that I'm doing. Everything that I do, guys, is proudly sponsored and powered by Just Markets. That's my rich baby daddy at this point. All right? Just Markets is my rich baby daddy. If you want to find me, you go through Just Markets. Pursuant to that,